with Phil Falcone and Larry Steinhaus on Talk Radio 1210 WPHT.
Good afternoon and welcome to Investor Schooling Live. Coming to you from Investor Schooling headquarters. I'm Phil Falcone here with my business partner, Larry Steinhaus. We are the founders of Investor Schooling. Get ready to learn real estate investing and stock option trading. Call us anytime during the show with your questions. The phone number is 855-939-1137. 855-939-1137. That's right, we're a live program. So you can call us anytime during the show and we will take your calls. Don't even worry about what we're talking about because we love to take our listeners' calls. Investor Schooling is located in Langhorne, Pennsylvania, serving the Philadelphia area in a real brick and mortar building. That's right, we're in the same building 2 nights a week to help our students learn about real estate investing and stock option trading and a bunch of other things like financial literacy and just learning how to make more money. Does that interest you?
It certainly interests me.
It should interest you if it doesn't. Okay, you want to learn this business? The business of real estate investing and stock option trading. You want to learn it from people who live it every day. That's us.
Do we live it every day?
More than every day.
I actually live it every minute.
I think about it while I'm sleeping.
I know. Do you think about it when you're sleeping?
Yeah, sure.
Yeah, I have to admit, I think about buying houses. I think about negotiating deals in my sleep. Have you ever done that? Have you ever had a dream where you negotiated a deal?
I've had lots of dreams around real estate.
Well, tell us about one.
I'm addicted to real estate.
Well, I know. Isn't it great? Yeah. I love it when people are addicted to real estate.
Well, it's a great thing to be addicted to.
It's a lot better than other addictions, that's for sure.
Yeah. I could think of one or two I kind of like better, but
Well, go ahead, name one.
Sex.
You don't have to. Oh, sex, okay. If you're addicted to sex, though, the only problem with that is then you won't buy enough real estate.
Yeah, because you'll be too busy chasing something else.
Right, exactly.
Yeah.
You'll be going home, but not the same way. All right. So what else we got, Phil?
Well, let's talk about the fact that we're on now, Saturday at 2 p.m.
Oh, yeah, are you sure?
Boo, Susan. Boo. Really? We were supposed to be on at 10 o'clock until the end of March. Last time I checked, it's only March 12th.
Well, the end of March might be for some people on today,
Yeah, man, I'll tell you, I'm not too happy.
I'm not happy either, especially because this morning our entire day got changed. Luckily, we have a producer who was able to show up today because at 10 o'clock we had the other producer scheduled. He couldn't make it at 2 o'clock. So thank you, Omri, once again for filling in. We totally appreciate you.
Yeah, but I'm concerned about the future here because we need to be on a direct time.
Right.
The same time all the time.
Right.
You know what? People call me up and they go, "What time are you going to be on the radio today, Phil?" And I say, "I don't know.
Isn't that amazing?
Nobody's told me."
I know. See, we're a live show. We're not the recorded show like the shows you just heard the whole day listening to PHC. We're a live show.
That they record on their phones in their basement.
Yeah, in the basement, right. We built a studio to make this make this
like
better.
a $50,000 studio we built.
Really, and by the way, if you want to call into our studio, 855-939-1137, 855-939-1137. We'd love to hear from you, and we'd love to talk to you. If you're not hearing a repeat of the show, it's 2 o'clock, it's Saturday, and it's March 12th. Call in right now.
Yeah. Okay. Well, why don't we start talking about a little bit about inflation?
Inflation? Have you noticed there's been inflation lately?
Inflation is going to affect you.
Yeah, you think?
Could affect you positively. It could affect you negatively. It could affect you both.
So I have to say it is affecting me both. And as a real estate investor, I'm telling you, as a real estate investor, inflation is your best friend.
Yeah, I would say that I am not unhappy about the inflation right
absolutely
now, because I own enough real estate that I will benefit tremendously from it. I believe I will.
I totally agree, and I have to say my net worth has increased by a lot since I don't know, since in the last 9 months. A lot, and it's been a great value. In fact, when I refinanced, so I actually took advantage of this because I talked about this, right? I refinanced as many properties as I can because the banks will only give you up to 10. I figured out how to get 13. I kind of snuck a couple in while I was doing some others, and I got 13 refinanced.
Well, good for you.
So that was the most I could do because the banks, now the banks know about the other ones, so I can't refinance anymore. So I refinanced 13 properties. I got 3.5% on almost all of them. There was 2 of them that I got 4.25%, which I'm still not worried about. That's actually great, and that's going to carry me. I also pulled out all the cash, and the reason I pulled out the cash is so I could put that money and get that money ready for other investments. I also bought more silver. I also paid off some other of the higher interest rate houses that I have. So some of my interest rates are as high as 8%, and I paid some of those down using the money that I got from 3.5%. So I am ready to go right into this recession, if it is a recession, or depression, or whatever it becomes. It doesn't really matter to me. I'm all ready to go in. I've got my credit ready. I've got over $750,000 available to me in credit cards. I've got HELOCs ready. I've got 5 HELOCs right now that are ready for me to go. And all I'm going to do is sit back and wait for the seller's market to turn into a buyer's market, which will probably happen, I'm going to guess, somewhere in the next year and a half. Wow, look at that. We have a viewer from Austria. How cool is that? So somebody on Facebook just said they're from Austria.
Why don't you give us a picture of the view out your window?
Yeah.
Austria has some of the most amazing views on the planet.
That's pretty cool. So thanks, Vera. We totally appreciate you watching. And we also appreciate James and Sal watching, too. And by the way, if you're on Facebook, LinkedIn, Twitter, or YouTube, you can leave comments. We'll be able to see them. And if you want to do that as well, it'd be awesome. So
Hey, let's talk a little bit about the cycles of real estate.
Sure.
Okay, because when I hear about inflation, this is different for me because I've been in the business. I bought my first house in 1989. When did you buy your first house?
1983 or 2. I can't remember which one it was.
He's a lot older than me.
I'm not that much older than you.
I bought in 1989 was my first house. And the truth is, at the time, I was very anxious to buy, and I bought 2 houses in my first 11 months. One of them was a duplex, and the other one was a triplex. So I had 5 units in my first 11 months.
Well, that's good. I did not do that.
Right, but
I bought one
I definitely made mistakes because I
Yeah.
didn't understand cycles, and I think I paid too much for my first duplex, but I got a much better deal on my second duplex, so I kind of corrected it. But one of the things that I remember distinctly about that time is real estate was at the end of a cycle. It was at the top of the cycle when I was buying, and I just didn't know anything about cycles at the time. Obviously my fault. And between the years of 1989 to say 2000, my properties that I was accumulating really didn't go up in value. They
didn't.
They didn't go up very much at all. Minor changes.
But how many years did you have them for?
1989 to 2000. That's 11 years.
11 years. Yeah.
11
Okay,
years.
Yeah, sure. Yeah.
When we hit the summer of 2000, my properties started to go up insanely, like 10% a
Sure.
year. And between the years of 2000 and 2008, I became a multimillionaire
Right.
based off of my portfolio alone, not including any stocks or anything else, just real estate.
Yeah, so that was one of the largest times of inflation was 2000. 2008 we had the real estate market, it went crazy, and then it stopped, and then it stopped suddenly. It fell off a cliff. You remember how it fell off a cliff? Now, the weird part was I saw it coming. I wish I knew what I knew in the stock market then, what I know now, because that would have I would have been the Big Short, because I actually called it. I was doing a real estate seminar in 2007. And I just paused and stopped, and I said to the audience, I said, hey, you guys want to make a lot of money? Short Countrywide. And everybody looked at me like I was crazy. Countrywide's at 44. I remember it. It was at 44, and I said, it will be at 20 this time next year. That time next year, it was less than 5.
Well, I don't remember that inflation had a lot to do with what was going on between 2000 and 2008.
Yeah, it wasn't as much as it wasn't as much as it was inflation of housing is what the real problem was. The real issue.
Obviously, it was almost like the attention just went to real estate.
It did, right?
Okay, it just kind of went to it, and it stayed there until it ultimately crashed. But it's still, I came out smelling like a rose out of the whole thing.
Oh, yeah.
Yeah, it was
Absolutely.
a wonderful time for me. Wonderful time for me.
So here it is. I'm just going to look it up. 2008, we had a peak of inflation. It went up from 2004. The inflation was at 1%, and it went up to it was actually the last peak. It was the highest peak between now and 1980. Now it wasn't. We currently passed that peak in 2000. It was 2006, 2007, 2008. We currently passed that peak now. So it was a high inflation in 2008, or right before 2008. It looks like 2007. So yeah, it was a high inflation number. We probably weren't paying attention to it because we were just in real estate.
Well, yeah, I again, I was still relatively young in the business. I'd only been in it 11 years when 2000 came around. But anyway,
So,
I just
do you remember the Reagan years?
I was still in high school.
Right. I had graduated high school because I'm just a little bit older than you. I had graduated high school. I remembered the Reagan years, and I remembered the brilliance of Reagan, of how he got the economy started again. And it was actually a really smart play. What he did was he gave tax credits to companies hiring people. So if he was hiring you at, let's say, at that point it was probably $5 an hour, right? If he was hiring you at $5 an hour, you got a tax credit of, let's say it was half of that, $2.50 an hour to hire people. It was really, really smart. That's how he got the economy going again. I remember I get hired at a really nice job because of that. Now, it turned into a really good job after that, but I got hired because of that job, because of that.
Okay. Well, that's interesting. We should talk about cycles more often. So, because you and I both have been around long enough to understand that there are cycles.
Absolutely.
And what particularly causes them. It's an important topic. Why don't we move on?
Sure.
Why don't we talk a little bit about, I was reading something about companies in Silicon Valley. They pay their people in stock options. Have you ever heard of that?
Well, I've heard that before. Yes,
Right.
There's several of them that do that, and that's how they get you in. You know, they give them salary too, but they pay them in stock options to get you in. So they
Right.
give you a lower salary, and if the company takes off, you become a part of the company. I mean, imagine being one of the first employees of Amazon.
Right. So
You'd be extremely wealthy right now.
So what I was reading was that like specifically programmers, they need lots of programmers.
Sure.
Okay. So they hire these programmers and they put them under contract and they say, okay, you need to work for us for 8 years to get your full stock options package, right?
Right.
And so they don't get it until they complete the
Absolutely,
contract,
yes.
right? But that's interesting way to pay people.
Yeah, it's very smart. A lot of companies do that. By the way, if you want to call in, 855-939-1137, 855-939-1137. Our topics are money. Anything you want to talk about, money, inflation, real estate, stock options, the stock market, whatever it is. Even if you want to talk about the war, that's fine too. 855-939-1137. We'd love to take your call. All right. What else, Phil?
All right, so I've got a bunch of topics here that I was flipping through some YouTube videos. Sometimes I like to go on YouTube and see, kind of take the temperature of what real estate investors are thinking about. And some of these topics here simply came from a couple of videos that I was looking at. So one of them said, investing isn't risky.
I love that.
Yeah.
I am so that is the greatest statement ever.
You got to think about it. It's obviously very, very risky if you're not investing.
Exactly.
Because
If
you're not building any wealth.
Right. It's playing Monopoly, going around the board, collecting $200, and never buying a house. That's what it is. And at the end of the game, you're the first one out because all you did was make $200, and you paid your luxury tax, you paid other people rent, and you came back, and all you collected was another $200. It's not enough to survive. That's exactly right. The worst thing you can do is not invest. Invest in anything, even if it's minor, if you're conservative, but invest in something. Real estate is the absolute best investment, and it's funny because you got people all the time, well, what happens when real estate goes down? Just so you guys understand, real estate never goes down. It always goes up.
Well, that's not true.
Well, it temporarily goes down. I wanted to finish. It temporarily goes down. So maybe now you bought a house that you paid $300,000 for this year, and maybe next year or 2 years from now it's worth $250,000. If you sold it at that point, yeah, it went down. If you hold on to it through the next cycle, it's highly likely that $300,000 house will be worth close to $600,000.
Sure.
and it's typically 7 to 10 year cycles is what we live in real estate. In fact, this is the longest one. Well, it's not really.
I think the 2008 crash really lengthened the recent cycles.
Yeah, it did, but I think what actually lengthened it was, believe it or not, government overreach and COVID.
Yeah, of course.
Because we should have seen 2000 being the slow drop, and we didn't, and it actually boosted. And I hate to say it, I've said this before. This reminds me of 2001 when the government fed us all money, or actually, did all these programs to keep the recession from happening. It's funny. I'm looking at that graph. I still have it up. I'm looking at that graph, the inflation graph, and if I look at that inflation graph, I could actually see 2001 look like it was about to be a pop in inflation and then a sudden drop. So it looks like the 9/11 stopped that inflation move, and that's what caused the economy to go crazy. And then in 2008, we had right before 2008, we had the crazy inflation again, and it dropped off a cliff. And then we had inflation again in 2012, and then we've had steady, not pretty steady after that. And then we have the greatest inflation since. We have only 2 points since 1948 that are higher inflation than what we have now. And one of them, it looks like, is 1977, and one of them looks like 1973 and 1977, and that's Carter was 1977, which was the worst.
I'm thinking investing isn't risky should be on a T-shirt.
Sorry, I went off on a topic. I'm sorry about that. But yeah, you're right. It should be on a T-shirt. That's
could be
great.
on a T-shirt.
Yeah.
It could be on a billboard for investor schooling.
All right.
Investing isn't risky.
That's
What's
right.
risky is
It's
not investing.
Absolutely. Hey, look, we said that together.
Yes. There you go.
It must be true if we said it together.
Let's write that down now.
Okay. I like that. Write that down.
What's
so,
risky
hey, have you guys seen our billboards yet? Have you seen the
is
stock
not
option Sultan billboard?
Investing.
Phil's writing it down, and he's speaking it out loud while he writes it.
Investing isn't risky. What's risky is not investing.
I like it.
Okay.
I think we should put that on a plaque.
Should be on a T-shirt, I think.
I think T-shirt would be good, yeah.
Yeah, that'd be good.
I agree. I like it.
You
All
know.
right. So if you want a T-shirt that says that, you have to call in today, 855-939-1137. And when we make those T-shirts up, you will have the first one for free. 855-939-1137.
Somebody wrote, Signal Man, Jeff, wrote, The Big Short, greatest movie ever. I'll tell you what movie I think I like even a little bit more than The Big Short. I like The Big Short a lot. It's called Margin Call. Have you ever seen that?
No, you talked about it the other day, and I have not seen that.
Well, it's a really good movie. So it's all about this company that's doing exactly what the Big Short movie is about. They were mixing all these tranches together of AAA, A-rated, mixing it all together and selling it to the tune of $11 trillion.
Wow.
Now, keep in mind something. I don't know that the Margin Call movie is based on a real company or not, but it's fascinating. So they finally figure out one of their rocket scientist guys who analyzes charts figured out that this bubble is going to blow up, right? So these guys work all night long trying to figure out what to do. And what, just like typical bankers, what they decide to do is mix it all together and have a fire sale and dump it all. And they have to face the fact that, wait a minute, we're going to sell this garbage to all of our customers. No one will ever do business with us again. But keep in mind, they're looking at losing $11 trillion.
Yeah,
so
sure.
It's like, heck with it. We're gonna do whatever we got to do. And it's really fascinating to see everything that happens over a period of like just a couple days.
Well, I'll have to look that one up. That
Yeah,
sounds
it's a
like
pretty
another good
cool
one.
movie. It's on, I don't know. I got so many streaming services. I don't know where it is, but it's on one
Hey,
of them.
you are definitely a TV junkie.
I like to watch business movies.
Yeah.
I love business, and I love movies. So if you can give me a movie like The Big Short or like Margin Call, I soak it up.
I like that idea.
There's always amazing-
Yeah, absolutely.
There's always amazing lessons to learn from that stuff.
Definitely.
And there's some really cool stuff in the movie Margin Call.
Well, like I said, I'm going to have to look it up.
Yeah,
I
you,
like
you,
it.
you should watch it. You'll like it a lot.
Hey, I got to bring something up. Speaking of business, so I saw an article the other day that it's in Los Angeles, of course, right? And you ready for this? There is a bill in Los Angeles going out right now that says they're going to tax house flippers 25% surcharge for taxes if they buy a house and sell it within a short period of time. And it says a few years. It's not even like, within a couple of months. So you have to pay an extra 25% tax because you took a house, renovated, and sold it to somebody else.
This is a state that has more homeless people in it than anywhere else in the United States, and they're going to keep people from creating more housing.
Yep.
They have a huge housing problem. I told you what's going on in Oakland, right? You remember what I told you about Oakland?
I don't remember.
The city of Oakland, 5 months ago, approximately 5 months ago, decided to drop their zoning laws completely.
Oh, yeah, I remember.
Okay?
Yeah, sure. Yeah.
So now what you can do is you could buy a piece of ground in a neighborhood that might have $300,000 houses, and you could put an yurt on that property. You could put a trailer home. You could put a tiny home. You could put a school bus. You are now allowed to
do anything you need to do.
Anything you need to do because
Sure.
they're trying to get these homeless people off the street. And I don't think it's going to work because it's going to cause so many more problems.
Oh.
I mean, it's going to upset people who have a $550,000 house if some guy's living in a school bus next to you.
Well, I understand it too, and that might be an extreme, but this is an extreme too. I mean, this guy, Assembly Member Chris Ward introduced this thing, Assembly Bill 1771, right? And listen to some of the things. He knows nothing about anything. He says when investors fall out of the buying pool, that will give regular home buyers a chance to buy a home, because everybody is beating people out. Like they're doing cash offers and beating people out. He doesn't even understand what he's talking about. The people who are competing for those homes are the people who are buying it from the investor who renovated the home. They're not buying the cheapy homes. You're not talking about a regular FHA buyer who's going to go into a home that needs work and buy it and live in it. Somebody else is going to buy it and make that house habitable, and FHA buyer is going to go in and buy it from them. And this guy thinks that the investors are paying too much for houses. It sounds like, which doesn't even make any sense.
If only we could go back to Superman 1 movie, Lex Luthor's plan. Let's
Right.
put a bunch of bombs on the San Andreas Fault and have that state just fall into the ocean.
Yes, YouTube and the FCC. Phil was joking. Do you guys know what a joke is? He's joking. He's being funny. Please understand that was a joke. It's amazing, the censorship that
If
goes
there's
on.
any woke people out there, please call me up and tell me how inappropriate I am.
Yes, exactly. 855-939-1137, 855-939-1137. Feel free to give us a call about anything and anything. It has to do with real estate, money, I don't know, whatever. Doesn't matter.
You want to go to a commercial break?
Yeah, why don't we take a commercial break? We'll see you guys in a couple minutes.
Hi, I'm Phil Falcone from InvestorSchooling.com. I'm inviting you to a complimentary class this Thursday night at 7 p.m. I will teach you how to buy ugly houses and make them beautiful. As a bonus, we will also teach you stock option investing. 7 p.m. this Thursday night, 215-876-3002, InvestorSchooling.com.
Hey everybody, it's Larry Sinus from InvestorSchooling.com. You heard my partner Phil Falcone tell you why you should be there this Thursday night to learn about real estate investing and learn about stock options trading. We're telling you right now you will make more money than you've ever made in your entire life if you learn these two skills. This Thursday night at 7 o'clock, go to InvestorSchooling.com. Pull over right now, take out your phone and go to InvestorSchooling.com. RSVP right now, InvestorSchooling.com. See you Thursday. This is Larry Steinmetz from Investor Schooling. You've been hearing our ads for 4 years now, and you still haven't attended a complimentary class. Go to Investor Schooling right now. Sign up for this Thursday night. If you have questions, you can call us at 215-876-3002, 215-876-3002. Come this Thursday, complimentary class. Learn real estate, learn stock option investing, and learn everything you've ever wanted to know about money. 215-876-3002, InvestorSchooling.com. This is Larry Steinmetz from Investor Schooling, and you are
Last
invited to a
topic,
special
Bob.
presentation on
Stock
April
options, so.
24th. That's right, we're having an all-day presentation with freedom and finances. We're going to have some special guests that are going to talk to you about how to be free with money and how to be free with your life.
No.
Make sure you go
When
to
we
the
come
number
back.
4mmw.com. That's number
Interesting.
4mmw.com.
Wanna
Sign
talk
up
it
for
out.
tickets right now. You are going to be amazed at this amazing event. 4mmw.com. This is Larry Steinhaus, Investor Schooling.
Phil Falcone here from Investor Schooling. One of the best decisions I've ever made in my life was to be a real estate investor. If you feel the same way, all you need to do is get your butt to investorschooling.com. If you want to learn this amazing business, just call 215-876-3002, 215-876-3002. I'll be there to help you learn this business. See you at investorschooling.com. Investorschooling.com.
All right. Welcome back to Investor Schooling Live. I'm Larry Steinhaus. I'm here with Phil Falcone, and we are talking about real estate. We are talking about stock options. We are talking about inflation. We are talking about money. We are talking about just some really cool stuff, how to make money, how to live a better life, and how to... What else, Phil? How to do what?
Well, let's do this. I wanna talk about an interesting phone call that I got yesterday.
Oh, okay.
Okay, so I got this house up for rent in East Norriton, and it's on the MLS, and the house is a house I'm keeping. I like to keep rentals, especially good ones, and I'm keeping this house. All right, so I get a call from this guy, and he says that he's affiliated with a company that works with insurance companies. All right?
Interesting.
So what he does is he has a client right now whose their neighbor's house caught fire, and the individual's house that's his client, their house was damaged from the fire coming from the other house. See, the other house must have had a really, really serious fire that the house
Sure.
was destroyed, and it had enough heat generated from it that it actually caused a lot of damage to the other house. So he needed to find a house for his client, and he wants to rent the property from me essentially indefinitely. He's saying, like, I will pay your rent. I put an annual increase on it, and I'm going to put some clauses in there to make sure that in the event that I might need the house at some point, I would need to be able to take it back from
Sure.
them. But it sounds very interesting, and Larry and I were talking about it last night at dinner, and it sounds to me like maybe these insurance companies are going to pay an awful lot more for these houses than the actual rent.
So, so it's curious. You've heard of public adjusters, right? So public adjusters go out and they take a percentage, anywhere from 10 to 20% of the amount of money they get you. If the insurance company isn't playing nice. So if you have a $100,000 claim and the insurance company comes and goes, no, we only think it's worth $30,000. You hire a public adjuster, and the public adjuster comes in and makes their case for why it really was $100,000, and they take a piece of it. It almost sounds like this guy works with public adjusters too, and has negotiated a way that says, listen, we're gonna have your people housed very quickly. It's gonna be this much a month. You remember Debbie? Debbie works for our school. So Debbie works for our school. She had a car go through the front of her house,
Yep.
and it was terrible. And she was living in an Airbnb for about a month, and they were paying a lot of money to the insurance company was paying a lot of money to this Airbnb. I think it was between $3,000 and $4,000. So it could be pretty easy that this guy rents the house from you, and then rents it back to the insurance company, or rents it to these clients, and the insurance company could be paying him $3,500 or more to live in that house. So even if he's got downtime, he's still ahead paying you.
These guys don't have an insurance company, that they are not owners of an insurance company, but they have created an entity, and I'm not going to say the name right now, but they are looking to work exclusively with insurance companies. So there must be a real angle there.
Yeah, it does sound like a really good idea. It looks like a really good business idea.
It's funny because on Thursday night I was doing a presentation on vacation rentals, and I was talking about the fact that you don't need to buy vacation rental
Correct.
homes. You can just rent them. And then all of a sudden, this guy calls me the very next day. So Thursday night I was doing the presentation on vacation rentals. talking about renting people's properties, and this guy calls me up, and here he is trying to rent my property on a long-term lease, which is exactly what I was talking about.
Right, and then he's going to rent it back to the people from the insurance company, which is pretty amazing.
And insurance companies have a lot of money, and they're in a pinch if their tenant, if their client house was half burned down.
Sure,
maybe
absolutely.
they do have some kind of fiduciary responsibility to
Well, they
find
do. I mean, the insurance the insurance policy says that they will put them up for housing for as long as it takes to rebuild a house. Actually, to a maximum number. I don't know if you remember, my mother's house burnt down to the ground. You ever hear that story? I told you this. Her house in Florida.
Vaguely remember that.
Yeah, her house in Florida burned down to the ground, and I think they gave her about $140,000 of living expenses for her to live somewhere else while they were renovating the house. So it was a lot, and it took a year and a half for them to rebuild a house too.
Well, I think I'd like to learn more about this topic. If there's anybody out there who knows something about this topic, give us a call. 855-939-1137. 855-939-1137. We'd love to talk more about it.
Yeah, and you can talk about anything else. 855-939-1137. Anything you want to talk about, we're here. We'd love to take your calls, even though no one knows we're on the air right now.
Really?
Because we're supposed to be on the air at 10 o'clock. We told everybody we were going to be on the air at 10 o'clock, but no, we're on 2 o'clock.
So let's get back to some of the hot topics that I noticed was on YouTube today.
Okay, sure.
I like to monitor what goes on YouTube. It's a good way to see what people are thinking about. So one of them, of course, was use other people's money. We talk about that all the time.
Absolutely.
All right? You wanna throw a few comments out there about that topic, Larry?
Yeah, and first thing is, I never use my own money. Whenever I buy a house, I always use someone else's money. Now, someone else's money, this is the tough part. People don't understand this. Other people's money means any money but your own. It can mean a bank. By the way, it can also mean credit cards. I bought houses on credit cards. Phil's bought houses on credit cards. We taught our students to buy houses on credit cards. And when we teach you how to do that, you'll be blown away how you could buy houses on credit cards. Yes, don't worry about the interest rate. Remember that guy was having an argument with me on Facebook about the interest rates? But it doesn't matter, because if you could buy the house, you could buy the house, right? We also borrow money from everyday people, and that's what most people think other people's money is, and it is for the most part. It's other people's money is everyday people. If I go to whatever, if I go to Phil and I say, "Hey Phil, I'm buying a house for $75,000. When I renovate it, I'm going to need to put $25,000 into it, and when I renovate it, it's worth $150,000. Can I borrow $100,000?" If Phil knows me, likes me, trusts me, and believes that the deal and the numbers are correct, he has no risk. The only risk he has is the first month that I own the house, because if I buy the house for $75,000 and then don't take the $25,000 and renovate it like I said I was going to do, he ends up getting the house from me. But he could always put the $25,000 into it, even though he gave me $25,000 and get his money back anyway. So the risk is very small for someone to lend you money. And at the same time, what's the benefit for the person lending you the money? The benefit is a higher interest rate. I mean, if you talk to anybody in their eye right now, it just happened to be last year was a really good year, but it just for a lot of mutual funds. But most people get 2, 3, 4, 5% of their money, and when you tell them you're going to give them 6, 7, and 8%, and it's guaranteed, you're going to get a payment every month, guaranteed. They're very happy to lend you money. They don't ask you for your credit score. They don't ask you for there's no DTI issues. There's no issues at all. It's actually very simple. They hand you the money, and they go through, by the way, go through a title company. Don't just have them hand you the money. Go through a title company, go through closing, have the money sent to the title company, and then the money goes to the seller. And it's very simple to do, very easy to do. We have paperwork. We actually have sample paperwork on our website for our students that include a mortgage and a promissory note.
One of the best arrangements I ever made was with my mother. My mother was my main mentor in life. She taught me almost everything I know about business. And at the time, I offered my mother 7.5% interest to borrow a couple of $100,000 off of her. And she said she wouldn't move her. She was making 6% on her money at some mutual fund company, and she wouldn't move the money unless she could get 2 points. So I had to
Really? You had to give her 2
she
points?
She shook me down for extra half a point.
It's funny because I don't know if you remember the story. I've told you this before. My brother had put $100,000 into a annuity, and he was getting 1.5%. I told him he was nuts. I said, "I'll give you 7." I think is what I agreed to give him, 7%. And he goes, "Yeah, but it's going to cost me $3,000 to get the money back out of the annuity." And I gave him the $3,000 because it was worth it for me and it was worth it for him. So real quick, let's we got Larry in Quakertown who wants to talk to us about public adjusting. Good, Larry, what do you got?
Yeah, I heard you talking about your mother's house that burned down and the ALE they paid, which is additional living expenses.
Right.
And I heard that you were actually a little bit unsure about how that works.
I wasn't sure how it worked, but I'd love to have you explain it.
Well, the additional living expense can be actually limited certain ways. Sometimes it's limited for how long it takes to build a house.
Uh-huh.
Sometimes it's limited to 12 months. Sometimes it's limited by a dollar amount. It really depends on the individual policy. Public adjusting is not only there for those kind of circumstances, but insurance companies a lot of times will deny a claim, and a public adjuster can get that overturned.
Right, that I did say at the beginning. So I'm curious. So what do you suggest someone? Where do you suggest someone look at their policy to find this information?
Their policy is broken down into sections. On the declaration page of your policy, it will tell you what the full value is. It'll tell you that's for your dwelling. It'll tell you your contents. It'll have a portion for contents. It'll have a portion for other structures, and it'll also have a portion for ALE. And it's usually done right on the front page usually, but sometimes deck pages can be as many as 3 pages.
Wow, I've had
That's
deck pages.
the easiest way to find it.
Okay, cool. So how do you again? So they would find it there, and then what do you suggest people do?
Yes,
Should it
they
be a
can find
time amount? Should it be a dollar amount? What do you suggest that they do? Talk to their insurance company about.
Well, there's also deductibles, and the deductibles you got to be careful with.
Mm-hmm.
Deductibles are starting to get into a lot of percentages. That you need to talk to them about a dollar amount.
Okay.
1%. Let's use a 1% deductible as a just for an example. If you have a policy that's $200,000 for the dwelling, and you have a 1% deductible, and your roof blows off, they're not going to pay a dollar until that roof cost is more than 1% of the dwelling cost. So if it's $100,000 policy, $200,000, it's 1% of that amount, not 1% of the damage repair cost.
Oh, that's interesting. Okay.
That's something that people have a problem with.
Yeah, I actually
So
had.
you
I had.
be careful about that.
I had in one of my units. I had what's it called? Hail damage, roof and siding, and it was great because it was $42,000 worth of damage, and it was $1,000 deductible.
So Larry,
That
let
was
me ask you
great.
something. This guy who I assume you've heard me talking about the story of I got this house for rent, and this company called me up and told me that they work with insurance companies. So there obviously is they must be making a profit this way. Otherwise, why else would they do it? I mean, they're fulfilling.
They are making a profit.
Yeah.
Do you deal with people like that guy?
It's a lot easier. Well, we have certain people that we do deal with for rentals. They're I don't know if I should mention names, but they're pretty big companies. They work with both insurance companies and us as public adjusters. We can refer these people, and it helps everybody. A lot of places come furnished. When you have an ALE situation, sometimes you rent a place with no furniture. You also have to rent furnishings. You could do that as well.
Well, they already told me that they
So
were
it's
going to
not
furnish
limited.
the house, but they said they're definitely going to furnish it, but they are not going to Airbnb or VRBO it as a vacation rental. They're not going to.
Interesting.
But I didn't really care what they do with it. I mean, as long as they met my terms, I was okay with it.
So if I understand you, Larry, what's happening with Phil is this company is actually doing exactly what they said. They're renting it from him on an annual basis with the plans of renting it out to other people who are displaced.
For insurance purposes. I think that's an awesome idea, and I think it's an awesome deal.
Oh, very cool.
Is there any way for individual landlords to connect with insurance companies directly?
It's usually the insurance companies. It's kind of separate from the insurance carriers. Insurance carriers normally don't do that on their own. They, like whoever you've been talking to, is the kind of people that the insurance company would talk to.
Got you.
So if it's an investor just investing in properties, he might talk to the insurance carriers.
So if one of our students
yeah,
wanted to do
don't-
this, should they reach out to a bunch of public adjusters like yourself?
Public adjusters or insurance carriers.
Well, we
If I would.
Good. Good.
I said if I was going to do that, I would start making phone calls.
Very cool. Hey, we so
carriers.
appreciate it. We so appreciated the call. Why don't you tell everybody how they can get a hold of you and what you can do for them?
Well, if they want to call me, can I give them my phone number?
Absolutely.
Yeah, do it.
My phone number is 908-752-2019. If you have claims that are denied or you feel you're underpaid or even just to review your policy, there's a lot of policies out there that can get you in trouble. There's policies that are sold by mortgage companies. When you have a lapse in your policy and you have a mortgage, they have to insure it. They'll pick up the insurance, put it on you, and it costs more than a policy you could buy. And when it comes to a fire or something, you may end up not getting a penny out of it. So it's a good idea to have your policy reviewed by somebody who's unbiased.
Great. So do you charge to do that, or you just do it
Again?
as a courtesy?
No. Yeah, we do. I would check your policy out as a courtesy. I wouldn't get involved unless there'd be no fees or anything like that. Unless there's a claim, then we talk about it. But
Sure.
no, we like to make sure people are insured properly.
Excellent. You know what? Give your phone number out again, and I really appreciate the call.
My number's 908-752-2019.
All right, Larry, we thank you so much. We appreciate it. We appreciate the fact that you're a loyal listener. And what else, Phil? What else do we got?
All right, well, let's keep going.
All right.
Let's see where we're at. So, when you invest in properties, do you consider that you're investing for cash flow as the main thing?
So at my age, yes, I'm all about cash flow right now. Now, it's not always, there's different ways to invest. I mean, some people, like for wholesalers, for example, they're looking for a quick buck. They're looking for, like you call it, chunky money. $10,000, $20,000, $5,000, whatever it is, a wholesale fee, just to make a couple of bucks so they can pay their bills. What I'm looking for at my age, so I'm 58, and I expect to retire. But first of all, let me be clear. I never expect to retire. But I expect to know that if I ever had to retire, or if anything ever happened to me, I want to make sure that my bills will be paid forever, and I don't need to worry about it. So all I'm looking at is cash flow now, because I'm at that age. So my cash flow right now is somewhere, and this is my positive cash flow, somewhere between $12,000 and $15,000 a month positive cash flow after I pay all my bills. Now, I still have mortgages on those properties. My goal is in the next 10 years to have all those properties paid for, and that would probably double or more than double that cash flow number. So, if when I'm 70, I don't have to worry about anything financially. In fact, if anything happens to me, it's not like a pension plan where you have to name your wife as a beneficiary, right?
Right.
My wife automatically gets it. She doesn't even. She just does nothing, and whatever happens, happens. And then when she's done, those assets go to either my children, our children, or whoever we decide we want to send them to, right? And it's such a better way. People have these pension plans out there, and the pension plans. I don't know if you guys understand this, but when you retire with a pension plan, at the day you retire, you call into your HR department, and the HR department says you can take the full pension, and let's say it's $5,000 a month, or you could take a partial pension of whatever, let's say it's $3,500 a month, and if you die, your wife will get the $3,500 a month or some portion of $3,500 a month until she dies.
Do you have a pension?
I do not. But
Right.
hold on one second. Let me just finish this because this is really important. So if you take, and by the way, it's the day you go into the HR, nobody tells you about this ahead of time. They don't tell you that you have to make this choice. And if you make the wrong choice, which, by the way, anything but taking the full $5,000 is the wrong choice, but sometimes you're forced into it, right? How would you say, Phil, imagine you're at an HR department and you have no other income coming into your house. except for Social Security, and then and the HR department goes, Phil, if you die, your wife gets nothing if you take the full pension. And if you take $3,500 now, your wife gets $3,500 until she dies. What would you do?
Are they allowed to do that?
That's written in the pension plan. That's all pension plans right now. It's called survivor benefits. So here's what most people do. They're like, oh, but I love my wife. I got to give her, so I'm going to take less now. What happens if she dies first? Guess where that $3,500 goes when you die? Nowhere. It's all factored into the plan. That's all a decision. So there's a couple of things you need to do, and I went off on a tangent, but what I'm looking at is my pension plan is real estate. It's all about rental income. It comes into the house. Anything happens to me, my wife gets it. Anything happens to her, I get it. It doesn't matter. It comes into the house, and we can decide where it goes after that. Anybody we want to leave it to, we can leave it to. Now, just real quick, some people who are in that position and literally retiring tomorrow and didn't prepare, I'm going to tell you right now, take the difference of that money, the $1,500, and buy a life insurance policy instead for your wife. Get that full pension, because if your wife dies first, you get to keep the full amount. So that's the better play to do it anyway. That's something else that we teach. By the way, we don't sell any products. We don't sell life insurance. We don't sell annuities. We don't sell any products whatsoever. We teach you financial literacy, and that's one of the things we teach is how to work your pension plan properly.
So back to the YouTube videos for a second. One of the videos was Warren Buffett. And guess what his advice was?
What's that?
His advice was invest in yourself.
Oh, sure.
Okay? Get a financial education.
Yeah.
Right? Do you know any place that you can get a good financial education?
I know one place that's not a good place. YouTube.
Well, that's not true. I mean, there's a lot of. I've got about 1,000 videos on YouTube, so there's an awful lot of good info on there.
So the thing about YouTube, and just to be clear, because you're going to get information on YouTube, but the thing about YouTube, there's only two people on YouTube making videos. One is someone who has no idea what they're doing. They're 6 months into business, and they made a couple of good deals, and now they're going to teach you how to do it, right? And those are usually the ones that aren't selling programs. And you got to be really careful because they probably don't know everything you need to know. And the other one on YouTube are the people who are selling programs. And they leave certain things out because they want you to buy their program. And frankly, that's at least the better one, believe it or not.
Look, to me, it's like there's all this information in the world. You could buy books. Some of the books are great. Some of the books are terrible. Same thing with YouTube videos. I mean, you know.
I know a great book.
Yeah. Money Hacks.
Money Hacks.
By Larry Steinhaus.
That's right. I got a new book coming out. It's called Money Hacks by Larry Steinhaus.
And the subtitle is Because Everything You Think You Know About Money is Wrong.
And that's true. Everything you think you know about money is wrong. I'm going to just open it up to one random chapter. You ready? Chapter 18.
Go ahead.
Don't pay taxes. How you like that one? How would you like to? How would you? By the way, did you know that when I when I'm in my 65 to 70 range, I'm going to be able to take that income without paying taxes? Would you like to not pay taxes, Bill?
Sure.
Would you like to also be able to qualify for Medicaid and have millions and millions of dollars worth of property?
Sure.
Yeah, most people will go, what? You need to understand that one. That's an interesting one. You can actually, if you don't own your properties, which I don't, they're all in trusts and they're all in LLCs.
Well, there's a lot of amazing things that we teach our students here, and it's going to enrich your lives.
Yes, definitely. All right, what do we got? You want to take a quick commercial before the stock option consultant comes on?
Sure.
All right, let's take a quickie.
Hi, I'm Phil Falcone from Executech Suites. We're an executive suite center in Huntington Valley on Buck Road, 67 Buck Road, Huntington Valley. I'm sure you've driven past it. We're right in between Street Road and County Line Road. We have 47 offices in the prestigious address of Huntington Valley. I have offices starting at $595 a month. You're probably wondering, Phil, what do I get for $595 a month? Let me tell you. You get an office big enough for one person. You get the furniture in that office. You get the telephone on the desk. You get the telephone numbers. You get the fax numbers. You get 2 full-time receptionists to answer the phone in the name of your company and patch the calls to you. So if your company's ABC Painting Company, hey, ABC Painting Company, how can I help you? Would you like to talk to Bob? Let me get him on the phone. You could be home sleeping on your couch and I'll patch the calls right to you. What else do we give you? We give you the conference rooms. We give you the kitchen. kitchen. We give you the mailboxes, the printer, the copier, the scanner, UPS service, you name it. All of the utilities, cleaning service, and best of all, we give you free coffee. Get yourself to Executex
That's
Suites.
good.
Phone number is 215-942-7701. 215-942-7701. ExecutexSuites.com.
This is Larry Steiners from Investor Schooling. Are you tired of being broke? If you're tired of being broke, go to investorschooling.com, sign up for a complimentary class this Thursday, and learn how not to be broke. That's right, go to investorschooling.com and sign up for a complimentary class this Thursday. And if you have any questions, you can call us at 215-876-3002, 215-876-3002. Go to investorschooling.com, sign up for this Thursday, and learn how not to be broke. Investorschooling.com. This is Larry Steinetz with Investor Schooling. Are you tired of the Biden economy? Do you want to learn how to thrive in the Biden economy? Because we're going to teach you that this Thursday night at Investor Schooling. So go to investorschooling.com and sign up for a complimentary class this Thursday night and learn how to thrive in the Biden economy. You can also call us at 215-876-3002, 215-876-3002. Tell me you're tired of inflation. Investorschooling.com. We will see you Thursday. This is Larry Steiners from Investor Schooling. Have you learned how to make money with stock options trading yet? This is something you want to learn. This is an amazing skill, and you can learn how to make money at Investor Schooling this Thursday night by going to investorschooling.com and signing up for one of our complimentary classes. You can also give us a call at 215-876-3002. Go to investorschooling.com or give us a call, 215-876-3002, and you will learn this Thursday stock options trading, and you will have fun. All right, welcome back to Investor Schooling Live. I'm Larry Steinhaus. I'm here with Phil Falcone, and we are getting ready for the Stock Option Sultan. Did you have something you want to say about the Stock Option Sultan before we started?
Not particularly, no.
All right, that's fine. So here we go. If you guys want to come, if you've seen, by the way, if anybody has seen the billboard, I'd love to let you know.
Stock Option Sultan. Stock Option Sultan.
All right, Phil, I've officially decided I hate the stock market.
No, you don't.
I know, that's not true. It's 5 weeks in a row now the stock market has gone down. So it's pretty bad. It's actually pretty bad. It looks like we are definitely moving into a bear market, and there are definitely plays to be in a bear market. Some of the plays are to pick up stocks when they're cheap and sell them as they go up. Some of the plays are actually buy puts, or even if you want to short the stock, you could do that as well. But a lot of stocks are moving down, and it's not making me happy right now. We got the travel stocks that they're way below the price they should be, and the travel stocks should